Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, the 23rd of January, 2019. And we're just after 3:30 p.m. We've just reopened the stock indices. You're looking very, very close to where the market finished out for the day. Yes, it goes another 27 minutes, but the settlements determined that 3:15 the market closes till 3:30 then reopens. So it's been a good day for the Dow, a good day for the S&P and the NASDAQ. The Russell's getting thrown back a little bit, and if you look at the metal, silver gaining on gold with the dollar suddenly getting a lot weaker being 16 points. When we look at the S&P 500 for the week, you are down 32 handles. So it's nice to see the rally, but the market's not up for the week. This has been what I'll call a heck of a rally to the upside, and the question is, has the market peaked out on this rally in this general zone? And I know you're going to say, why do you mean peaked? Why can't it go higher? Number one, it can go higher. I'm wondering at what point between this most recent highs, I can even go up to the highest high down to this low, but we're at about a 50% correction depending on where you measure it, up to a 62. And on the weekly charts, you know you're into an area of resistance right here. Now, when we look at the chart action, as measured with the swing line, it's the same chart without it, you get to see that you have the pattern of higher lows and higher highs. That certainly is bullish until the market takes out this low right here. And if we come to that low, you can see that it was 25.9650. Okay, so until that's taken out, we certainly, you can't argue the higher highs, higher lows. The market is caught between the 18-day average of closes, which it hasn't hit since almost the first week of the year, up to the 100-day average, which it hasn't even made an attempt at hitting. It hasn't done it, frankly, since about, last September, October. The Bollinger Band is right here in the market at 26.89. So if somebody were to ask me, what's the immediate target? That's the immediate target if it can get there. And momentum is staying bullish and embedded. Now, what you have to keep your eye on is you're going to reopen tonight. Do you lose that reading or not? Because of where the market settled in the range, I'd say not. That doesn't mean you can't drop later, but when it reopens, it'll keep the reading. I'm making a guess, but that's what I suspect. I cannot say the same thing on the NASDAQ. The NASDAQ is flirting, as you can see, with trying to get under this 80 number. Hasn't yet done it. So the trend is up, the bias is up, but momentum is out, for lack of a better word, right on a cusp. It is trying to stay bullish, and until it loses its bullishness, there's nothing I can say about that. When we come to the Dow, you still have the embedded reading. The market's in a resistance area. It's been here, done this. Can it reach into the rest of the Bollinger Band top at the 2483, the 200-day moving average at 25,014, and the 100-day all the way up here at 25,096? It could. With the embedded readings, you don't bet against the market. It's when you lose those readings that you want to go the other way. Now, in the Russell, even though it's closed lower, it didn't lose its embedded reading. The difference here is the path of it's going down, and the market's going to close center line to bottom half. Unless it pops tonight, you can lose this one first. Be cautious about that. When you lose it, if it stays lost, it's often a sign that price and the 18-day average are coming together. In the VIX, we have lost the bearish embedded reading, but all at one time. This is what embedded looks like. I've been arguing yesterday. We keep fighting at this 100-day average of closes. You can see this is where you closed on Tuesday, still hitting it and fighting. Now, if it goes up, I would expect the 18-day average to be the resistance, but if it goes up, you're probably going to get the slow stochastic over the 20 level, and it's what happened and where it closed. Here's the importance. It's already hit its target. So now I don't know what to do with it. You have a market that's lost its downtrend. It went up to its 18-day average and got thrown back pretty hard. It fell 200 points once it hit it. In the bond market, you're still very much in the bear camp in this. You still have the lower highs, lower lows. Now, when I look at the slow stochastic readings, both numbers today are under 20. You see that? They were under 20 yesterday and the day before. So until the red line closes over 20, the market is what? Bearish. If it loses the embedded reading by the red line, let's assume tonight it opens over 20, the odds would favor price is going to try to get to that 18-day average. Is there anything to do on the upside? Unfortunately, I don't see it. We do have the European Central Bank talking tomorrow, but I don't know that that's going to do anything. We're oversold as can be in the 10-year notes. You've come down, haven't had enough power to get to the lower Bollinger Band, and you may not have that power. It spent an awful lot of energy on this break, and it's oversold. In TLT, the market today has got a lower low, higher high, so there's no trend. Now, what I look at is the market embedding. Both numbers today were under 20. They were under 20 yesterday, the day before, not the day before, so we embedded. If you lose it, I look for the 18-day average. Not very dramatic. As long as it's in place, I say the pros will keep selling the market, looking for the lower Bollinger Band. But if that loses, that's embedded reading, watch out. They'll probably cover short their ideas on that. In the dollar index, was that the rally? I don't know. But it certainly slipped back today. The market acts like it wants to get back to the 18-day average of closes. It is overbought. It's been in an uptrend, but it's extended quite a bit up there. In other words, I think the power may have been spent. Reverse that for the euro. And of course, with the dollar and the euro, you got the ECB meeting tomorrow. I don't know what they're going to say, but so far, all the economic data I'm looking at out of the ECB in plain English stinks. Germany, the strongest country, slowdown. Everybody else in a slowdown. We don't know what Brexit's going to do one way or the other. The pound has recently got stronger. But you cannot say that inflation has grabbed hold. I don't see the bank having a reason to raise interest rates. So that weighs on that market. In the British pound, the trend is up with an embedded reading. You're over the upper Bollinger Band, so the odds favor the market will try to get to the right-hand side. But as I've said, this is a son of a gun to trade because if you pay any attention to the fundamentals, you instantly get confused. In the Japanese yen, their economic data came out not good. So they've gone into a deficit in trade with China. Their trade with the U.S. shrunk. Their deficit did shrink 20%, but they're not growing. So you get people that run to the yen in times of they get scared of markets, and then it gives that back, not necessarily short order, but it's basically given back 80% of the move already, if not more than that. In Bitcoin, as I've said, you're stuck in this sideways action. The bears have control. You still have the lower highs, lower lows. However, you are very oversold, and each time we've hit this recent support of the Bollinger Band, it has been able to stymie the break. In Brent versus WTI crude, we'll see what the API numbers look like tonight, and I'll write about it in my report. We'll see how the EIA tomorrow matches up with it. Suffice to say, you've got a market that still has higher lows and higher highs, but. You're trying to lose that embedded reading. You don't want to open much lower tonight. If you do, you'll lose it probably on the opening. So how I view that is still an uptrend with upside bias, but getting old in the tooth right here. I can almost say the same thing on WTI, but saying it isn't playing for it. Why? You're still embedded. Until the red line closes under 80, it's embedded here and here. Now, you lost it in the gasoline and you went back to that 18-day average as we talk about, and the market is now got to figure out what next. This is a market that has no trend and is in the middle of no man's land. In the gas, the market is getting already disappointed with just a prediction tomorrow for about, I think they're talking about 173 billion cubic feet out of storage. That's not enough. The 5-year average is 243 feet, at least that's what it's been. And I think on our last report, we had 185 taken out. This is the heart of winter. Should be using more gas up. What's the pattern right now? Well, the swing line's up, but the close is under the 18-day average. They nullify each other. You have nothing, and momentum is pointing down. So you put it together, you try to come up with game plans, and that's what we do with our research. So if you're the type of person that likes technical research, some fundamentals thrown in, trade ideas. Gee, sounds like a commodity trader. Either call my staff, go to our website, sign up for free to see our market research and what it's about, or you can click right up here. We'll put it in your hands. I'm Ira Epstein. You have a good day.